What's going on, guys? Amy Nicholas, welcome back to the channel. In today's video, I'm doing a recap of my Thursday day trades. So did I learn my lessons from the day before about the indicators I've noticed on my chart that have helped me to figure out where I went wrong? Let's find out. Okay, so the first trade, and this is part of the 20 trades experiment I'm doing. So on Thursday, I did trade number 18 and trade number 19. So I'm buying 2 shares for each trade, and I've got a trailing stop loss of 75 cents. So I decided to go short on Tesla. This week has just been crazy, right? Like the markets are all over the place, erratic, fearful, some buy the dippers, all kinds of craziness. And it looked like Tesla was going down. So I was like, let me short. I'm going to go with the ETF TSLQ. And I got in at 42.18. It was below the 9 EMA line, which was one of my indicators I realized could really help me. And when I kind of got in the trade, I'm like, oh, maybe I should have waited just a little bit longer for like another candle confirmation close below it, because it was kind of just too close to the 9 EMA. And the trade did not go in my direction within the first 20 seconds in. So what I ended up doing was just kicking myself out of that trade for a loss of 45 cents. And, I've normally got the trailing stop of 75, so max loss of $1.50. So I felt like I did the right thing in terms of like getting myself out. However, it's quite possible it could have continued going my way because I tried again. And then the next trade I get into, same ETF TSLQ, I'm getting in at 42.24. So I'm actually getting in higher price point than the first trade. Now, I didn't write down my times. I need to do better about this, about times of entry, because I like to know, what time of the day do I get into a trade? How long am I in that trade? And what's my average kind of length of time? Typically, my best trades seem to happen as little as 15 seconds up to maybe 5, 6, 7 minutes. It seems like if I'm 10 minutes or more in a trade, that's when things don't go my way, or I've been in it too long to get the move that I wanted. And so this one, I wish I had documented the time frame here, because I don't think it was that much later that I got into the second one. So I got in at 42.24, and this one, I believe the trailing stop got me out. I wanted to try again below the VWAP and below the 9 EMA, which were the 2 trading indicators I realized I need to pay more attention to, especially with Tesla, because the price action really sticks to those levels sometimes. And if you get in between them or just around them, a lot of times you just get chopped up, right? There's sudden moves to the other direction, could kick you out for that reason. And so that's basically what happened again on this one. And it went down to 41.66. So the price really moved very quickly, and I had a loss of $1.17. And, my thing nowadays is like, okay, 2 reds, I'm done for the day. Kind of the same thing. If I get 2 greens, I'm done for the day. And even some scenarios, I'm like, if I get 1 green, I'm happy to walk away. Some days if it's, decent for the profit. So the P&L today was minus $1.62 because I'm just trading the 2 shares of this, $40 ETF. It's nothing crazy, but I think what was going on for Thursday, I think that the trailing stop was, it was minimizing loss, but on that first trade into the second one, I probably could have gotten a much better win. Gotten a win, first of all. Second of all, gotten a gain if I hadn't been impatient waiting for it to go my way, and I hadn't had a 75-cent trailing stop. If it had maybe been a fixed stop, I think that I could have basically just had 1 trade and waited just a little bit and had it go my way. Because that's obviously what happened is, like I said, I got in 42.18 on the first trade. The second trade I got in 42.24. So it eventually was going to start going my way. And then, eventually I did get kicked out, of course, but it could have gone enough. I think in the second one too, I was going up in profit a little bit. So maybe I wouldn't have gotten close to the dollar take profit level, but I still could have gotten something. Like I said, I could have gone from 2 trades to 1, grabbed and go. Ross Cameron's one of my favorite YouTubers, and he talks about this. He's like, you find your A quality setup, right? You get in, you get green, and you get out. So, some lessons learned. I've got one trade left for the 20 trades experiment, and I'm gonna do a recap video after I finish all 20 trades and just kind of go into detail, about like, okay, the second series. The first series, I traded one share with the 75-cent trailing stop loss. And this second series, I've been trading 2 shares because my goal is to basically double down each time I do these 20 trades. And this whole idea came from the great Mark Douglas, who wrote The Disciplined Trader, Trading in the Zone. And I watched a YouTube video, which you can see this in my day trading resources down below. It's a free Google Doc you'll get access to if you put your email in. And I linked a video in there that changed the game for me. And basically his premise was, think of your trading in terms of a series, not each individual trade, but rather look at your last 20, or he says, or up to 25 trades, and then kind of judge from that. Don't try to like pick apart each individual trade as like do or die. Look at it as a series and don't care about the outcome. Because he's like, you don't really have control of the outcome. You have to let that go. You could have the best setup, you could have the best entry, you could have the best strategy, but sometimes things just don't go your way. Like the great traders, some of them are only profitable 40% of the time, winning 40% of the time, but they're profitable. So it's not so much about like how many trades you win. And I think I was kind of over focused on that in the first 20 trades because I actually had a really good win rate. I had like a 71% win rate. And the second series, I have definitely been losing more than winning. And I'm going to kind of recap this in a future video for you to kind of explain what I think changed with my trading. Of course, we're dealing with slightly different market conditions. The first 20 trades I wrapped up about 2 weeks ago, I think. And now with the tariffs and everything going on, economy-wise, it's gotten even more volatile, even trickier to trade. So trying to figure that out, navigate the waters, it's been a little bit different trading environment. So each time these things happen, you have to pivot, you got to adjust, got to figure out like, okay, what can I do differently? And one of the things I realized too was some of the things that were working for me since I began trading, I'm in my 5th month now, but since I began trading was the time of day I was trading. Initially, I had great success trading the pre-market into the open. And when things kind of shifted and markets started changing initially in end of December, I started to get a little smarter about using a stop loss and everything. And I realized, hey, I can't trade the pre-market with the stop loss. So I didn't trust myself enough to basically manually stop myself out with trades. So that's why I shifted to trading into the open hours, from like 9:30 up to like 10:30 or 11. And I feel like lately that first hour, it's got the volume, which is key for being a momentum trader like myself, but it's been so erratic and so shifting. The direction of the market isn't clear some days. We could start negative on everything and I'll try to short something and it's like, I'll immediately get kicked out. It'll be something will turn or shift or whatever, buyers suddenly step in and whatever the reason, I'll get kicked out and I'm like, okay, well, maybe I just got to wait longer into the day. And there was somebody that commented on the channel and I appreciate their comment because it caused me to really think about the time of day I'm trading. And he said that he was trading from 11:30 to 12 Eastern, I'm assuming. And I was like, okay, so that's like 8:30 to 9 for me. And I'm usually trading 6:30 to 7:30. I'm like, well, maybe by that point in the day, things are a little more clear. And it's a little more like obvious, trend direction. So instead of trying to guess and figure it out and you think you're going the right way, you're following the trend, or you're catching a reversal and you really aren't, stop trying to make it hard on yourself, I'm like, okay, maybe now I need to like shift into even a different time frame of when to trade because we need every factor in our favor right now because it's more challenging. But the good news is that you can win in this market you can freaking win any market. Bull market is going to seem so easy. Like, can't wait for that to come back. Might be a year or two, but yeah. So, and then there was a couple of things I wrote after I traded and had these 2 back-to-back losses, was that I actually was about to walk away. I could have walked away doing 0 trades because it was sort of unclear and I wasn't confident in, you know, the overall direction. I just happened to see what looked like my setup. And, you know, and then I ended up taking 2 trades and they were both red. So I should have stayed back because it was too much choppiness in Tesla. Gets into these choppy zones all the time. And it was below the VWAP and it was below the 9 EMA, which were confirmations. I was looking at my stochastic oscillator confirmations, but you just never know when that sudden volume is going to flood the market and change the price direction. So yeah, or you get stuck in a range. And really, I looked at Tesla after, you know, 10, 15 minutes after I got out of that second trade, and it was still stuck in a range. So it just was a bad time to trade. It was a bad time to enter. And, you know, after the first loss, even I should have just been like, okay, we're done with that. But yeah, and the other thing was too, that morning, wasn't feeling the best and I slept in a little bit and I just didn't have the feeling of entering the market with like, I'm ready, you know, like I didn't have as much time to prepare, to look at the charts, to see what was going on. And so I'm like, okay, on those days, either I take a step back and I don't trade because I'm not ready, or I take my time, do the prep and all that, even if it's past the market open, like don't look at the charts yet, just take my time, ease into my day, get prepared, and then trade later in the day. So that's kind of what I was thinking of here going out. So anyways, guys, like I said, feel free to check out the day trading resources that I've got down below in the description and the comment section if you want to know, you know, all the YouTubers, the books, the videos that have helped me thus far get into month 5 of day trading. And I've also got a new video out too about what my first 4 months were like. And you can check that out on the channel. I'll see you on the next one.